Thank you, Studio 3 in Brunei. Hello and welcome to Global Exchange, taking a look at the week's top market-moving stories from around the world to help you connect the dots. I'm your host, Mariam Bamard in London, and this is Reuters. Coming up. In a week where all eyes were on economic data, China's figures prove further weakness in the global economy. Clouds hang over the Bank of England's new measure to stimulate the post-Brexit vote economy. And a shake-up in the entertainment world, how China's richest man is taking over the world of movies. To our top story, in China's economic activity slowed in July. Exports and imports fell more than expected in a rocky start to the third quarter. It's all pointing to more weakness in global demand. As Sonia Legg now reports, it's a problem for Germany too, despite slightly better than expected industrial output in June. Well, European shares in the red today, with the FTSE First 300 down almost 0.5%. Equities are some of the top losers this morning. Europe's stock 600 flat at the moment, though, with Italy's FTSE MIB one of the biggest losers today, down 1%. Shares in oil majors also leading gains today in commodities, with prices climbing as a looming strike in Norway very much threatening to cut output in Western Europe's biggest producer. The expectation is that we'll likely see more appetite for safe havens like gold as well in the coming weeks, as political uncertainty still weighs in Europe. Welcome back. It's the world's largest retailer, and while Walmart has traditionally been in bricks and mortar, now it's looking to boost its online presence to compete with the likes of Amazon. The company has this week announced it's buying online retail startup Jet.com to jumpstart growth of its e-commerce operations. It comes in the same week that department store chain Macy's announced it's closing 100 stores to focus on its online operations. Fred Katayama has the details. In fact, the common consensus was that if there was a referendum, all 4 countries would vote to remain in the EU, with majorities of at least 63%. Now, the main reason is that the single currency, euro, continues to unify these nations, with Yen Weidman, one of the most hawkish ECB rate setters, saying that despite Brexit, the bloc is facing an upward trend. We also spoke with Yan Den, head of research at Ashmore Investment Management, to find out how strong the unity is at this point. Well, it's been a big week for oil markets, a really choppy ride, but then prices were on the up again by Friday. As we heard from Peter Cardillo a little earlier in the program, an outlook published by the International Energy Agency said it expected the supply and demand balance to tighten towards the end of the year end, and that's also supporting prices. And late on Thursday, Saudi Arabia's energy minister offered some promise, saying that oil producers would discuss potential action to stabilize oil prices during a meeting next month in Algeria. For more on all the action in commodities this week, here's Mel in Singapore.